Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? It's Phil Tarrant here. I'm the host of the Smart Property Investment Show. I've been doing this for a little while, and a lot of people, there's one thing you're not short of in today's modern media landscape is podcasts, particularly property podcasts. There's hundreds of them now, and they're all out there, and I think there's a lot of people who actually understand and appreciate it. It's a great way to inform and educate people, help people with their decision making. There's so much information now available to property investors that it's hard to get it wrong, but I still see it time and time again, people making investment mistakes that's holding them back and not realising the wealth creation journey. So a lot of information out there. Not all of it's good. Most of it is. Most people's intent is pretty good. Some people's intent is a bit wrong, and you see that also with the proliferation of information. There's a lot of misinformation out there, and that's taking place. You see it all the time. But I like to think that the Smart Property Investment Show, it's one of the original property podcasts, the OG podcast. There's a handful of us who have been at it for nearly a decade now, and you'll always see us at the sort of top of the rankings because we have such a cohort of people who I like to think know, like, and trust us and use the information we have to make more informed decisions. I sort of get on my high horse a lot around what's going on in property. I think people tend to like it. I'm not a property professional. I'm a journalist by trade, not a very good one, but at least a journo. And you'll see in the podcasting that we do here, it's me looking through the lens of curiosity and being inquisitive about what's going on in property and speaking to people who are those professionals and are those people in and around it. And I do enjoy it. I get good fun out of it. Some motherhood issues for me on this is always make sure you surround yourself with the right people to help you make informed decisions. I'm very fortunate. I have good accountants and buyers agents and lawyers and all that sort of stuff, mortgage brokers who help with my decision making and do the heavy lifting for me as a property investor. And you hear me talking about mortgage brokers all the time. I've never, ever directly gone to a bank. I couldn't think of anything worse. Not only the experience of actually having to go in a bank branch, but the fact that the products you get is going to be shaped. So I'm always banging on around property investment and around mortgage broking. And I've managed to persuade someone to come into the studio who would be one of the OG mortgage brokers in Australia, James Symond.
The OG, eh?
The OG, Aussie home loans.
We'll save you. Yeah, that's it.
I've known you for years.
Many, many years. You've known me for about 40 kilos.
Yeah, that's true. That's true.
I'm 40 kilos down.
You are 40 kilos. I remember seeing you at industry events back in the day, running things. You always had an entourage with you, sort of people whispering and say, "Oh, here he comes, here he comes." That's James Symond. He's from Aussie. He's the CEO of Aussie. That guy. He's helped, I don't know, hundreds of thousands of people get homeless, maybe.
Yeah, I mean,
over the years,
we had over 1 million customers. So well over 1 million customers. So we've been around. So just over, I was there for nearly 30 years, 30 tremendous years since I was 19 years of age, since we started from day one with my uncle John, Aussie John, and had a magnificent journey for 30 years.
Yeah.
I was supposed to be there. He gave me a call when I was 19 years of age, and he'd been going through tough times. And he said, "James, can you come and look, give us a hand, work with me for a week?" A week turned into a month turned into just on 30 years for me until we exited the business and the business was sold. So it was an exciting journey and one where we ended up passing the baton of the business across as Australia's largest retail mortgage broker. We were certainly a household brand with Aussie Home Loans, with John standing on his fruit box or his soapbox, and the advertising and the impact that we had, and it was very, very exciting.
A lot of people would have known John because it was very visible, and from what I understand, he was a very good marketer. Really understood the Australian public and how to connect and communicate. So most Aussies of a particular vintage would remember him. What was he like? What is he like? What you saw on screen and the outside persona, is that what you see sort of behind the closed doors? Very smart, shrewd guy.
Yeah, John certainly got his message across because he was John. He was 100% authentic. What you saw is what you got. And John had the very best of intention for everyone. team members, customers, business partners, and he was authentic. So John and I worked very well side by side together. I mean, John's my uncle, my godfather. I was very lucky to have that deep relationship with him, and it was a lot of fun to work with John. And he was very much sure. I mean, running the business is one thing, but very much focused on great marketing and PR. He had a great nose for what the customer wanted, and that showed in our results and our impact in the market.
So 30-odd years with Aussie, and it's now part of the Commonwealth Bank.
Well, it is. So what actually happened is that we end up selling down the business over a period of time to Commonwealth Bank. They end up owning 100% of the business. I think the Royal Commission changed their outlook on the mortgage broking industry, or their ownership of the mortgage broker, their ownership of a share of a company in the mortgage broking industry, and they ended up selling the business to a company, a technology business, which owns it today, and they do their best. And John and I exited the business at the time, and so I had my half-time break, which has been just over a few years now for me, and over the next 6 and 12 months, I dare say you'll probably see my head pop up somewhere.
Oh yeah, that's as a journo, that's very curious, and maybe there's something in it. You can't give us any more details. We'll be the first people you tell.
Not you.
No.
No, I'm kidding. Maybe.
Yeah.
So,
no, that's cool. It's good to hear, and there's so much. You essentially you grew up around home loans. Like in many ways, it's sort of part and part of your journey as a professional is around home loans, and it would have no doubt shaped a lot of the stuff you did personally, because I know you used to move around Australia, and you're very good at developing the Aussie franchise network. And I know many of those Aussie franchisees, right? Like they always spoke very glowingly about the organisation. They were sort of very family-centric type of organisation, but you used to go all over Australia, sort of getting Aussie moving. That would have been pretty cool.
Always on the road, Phil. I mean, I lived in Brisbane for 9 months, Melbourne for 9 months, building the businesses there. But I was always, every week of my life, I was on the road. And it was very much a family-style business. And with John as chairman, me as CEO, that was expected to be the case. And growing up in the business was exactly that. I mean, I was 19 years of age. It's all I knew for 30 years. I started, and I was a loan advisor, a loan consultant, as we called them at the time, for 18 months. I was a sales manager. I was a settlements clerk. I was a call centre operator. I was a small sales manager. I was a national sales manager. I was the general manager. I was the CEO. I mean, I just kept developing through the ranks and kept on trying to elevate myself as best as I could. And at the same time, learning and carving myself and trying to be the best I can be. I learnt from Sydney to Harvard to Columbia Business School to, I just kept going and just kept trying to be a better leader for the people. And at the same time, became very interested personally in property, and became a pretty strong property investor, which I still am today. I was fascinated with property. My grandfather was heavily into property, and I always just wanted to get into property. And so still today, I'm very long in property, perhaps for good or for bad. I'm not into shares really at all. Don't understand the share market much at all, but I'd like to think I understand property a bit more than most.
Well, that's one of the reasons why I wanted to bring you on the show to talk about property investment. And we've got a huge cohort of property investors that tune into this, and I get a lot of satisfaction. I find a bit uncomfortable with it sometimes, but I'll be at someone go, "Oh, Phil, I've been listening to you for 5 years. Thank you so much. Before I was doing nothing. Now I've got a property portfolio, and I'm doing this, and I'm making all this dough, and I get great satisfaction out of it." So I like to bring people in. Welcome back. It's Phil Tarrant. I'm the host of the Smart Property Investment Show, chatting with James Symond, who a lot of you would know from Aussie Home Loans. Now, before we get into your property investing journey, James, mortgage brokers. I've only ever used a mortgage broker for, I don't know how many loans I've got over the years, I don't know, 30 or 40, probably more. I couldn't think of anything worse than, as I said, going to a bank branch. How much has mortgage broking changed? I know that 73% of all loans now are written through the mortgage channel, 70+%. That's a lot, right? When you guys kicked off, it would have been about, what, 5%? You've seen some big changes.
Yeah, so when we kicked off as a non-bank lender, mortgage broking was low single digits. When we kicked off after 10 years and transformed into a mortgage broker, mortgage brokerage was about 12 to 13%, 15% max. And we, I'd like to say, probably heavily influenced the commercialisation of mortgage broking for the mums and dads out there. Sure, there'd been mortgage brokers for many years, but they arguably didn't bring to the table the branding and the influence that Aussie had. And so we certainly flipped the game there a lot. Mortgage broking is just so, I mean, to not go to a mortgage broker for a mum and dad is simply insane. 73% of customers go to mortgage brokers. That's only going to grow. That's only going to grow. When you look at it, you look at what the customer value proposition is. Why wouldn't you go to a mortgage broker? Why would you go to an individual bank and just, speak to them about their one single home loan in which they have a bias in which to sell you, instead of going to a professional individual who can actually bring to the table within minutes dozens of lenders that are on the table? Because don't forget, lenders are changing their requirements daily. Customers are becoming more complex than ever. So, this whole, even this whole online business is a real challenge. And that's why online hasn't gotten genuine traction in the mortgage broking industry in Australia as yet. Sure, some businesses write bits and pieces, but it pales into insignificant compared to a face-to-face meeting with a mortgage broker who can go through and unpack the needs of a customer who's becoming more and more complicated by the day. And so mortgage broking, I just think, is just going to grow even much larger than 73%, whether it's 80%, whether it's 85 or 90, who knows? In other countries, it has been as high, if not higher than that, because it's meeting the customer's needs.
One of the biggest challenges, just to talk sort of some industry shop for a moment while I got you here. Well, one of the biggest challenges I'm seeing across the broker space is that there's a huge customer appetite for using mortgage brokers. They see great value in using mortgage brokers. And to your point, you can see broker market share increasing continued because of that demand. But on one side, you've got that. And then the other side, you seem to have lenders who have a reluctant relationship with the broker channel, and they would rather go have direct relationships or use their digital channels, right? So I'm still trying to orientate myself around this situation scenario, because there seems to be different forces moving against each other, and in many ways the key thing's getting forgotten, and is that what's best for the actual consumer. How do you think this is going to play out? Like, it's a complicated world we're in at the moment.
Sure, what's best for the consumer generally will always win. Now, if you're one of the big banks out there who's built a big distribution channel, I mean, sure, mortgage broking is a necessary evil. I mean, there's a reluctance. Mortgage broking is so big that all the banks need to play in that arena. But look, let's be frank. If you're one of the big banks, especially probably the biggest bank, if they could put a bullet in the head of mortgage brokers and do it realistically, they probably would, okay? But at the end of the day, that's not what customers want. At the end of the day, they're smart enough to know that they need to provide the options for the consumer, whether to go directly to them, to go through a mortgage broker, to go online, or whatever. So the smart banks are basically building a diversified distribution channel, and they've just got to go their hardest if they want customers to go directly to them.
And digital mortgages, like, I think we probably share some. We got up the other week and we sort of share some views around this. And I'm thinking mainly through the lens of property investors, right? Property investors, the best investors I know are nimble, they're active, they're always finance ready. They typically got their stuff sorted out. They lean on mortgage brokers for being an enabler and probably working through some trickier sort of situations. at a practical level, I don't think there's any technology that could do me a digital mortgage. They just way. They just wouldn't be able to understand it.
Mate, the best investors have a mortgage broker or a lender in their corner. The best investors have their mortgage broker or their lender on speed dial, so to speak. You know, they don't just have their computer at hand. The best investors are probably a little more complicated than most as well, and they need that human interaction to understand what their needs are, which change invariably all the time, as do the lenders in which they're using. So online and digital mortgages, look, what happens in 10 years' time is another story. But today, 2 years, 3 years, and 5 years, digital mortgage broking, in my opinion, is an extremely small part of the marketplace. You know, Phil, today, I don't know a single mortgage broker that is online where there is no human involvement. Non-bank lenders or directly to a bank may be a different story, but a mortgage broker, I don't know a single mortgage broker who is online or is digital where there is no human involvement. Once they actually type in their requirements in the computer, it really goes to a call center. It really goes to a human behind the scene that sorts it out. That's not digital. You know, that's poor service. So, and whilst ever there's no saving for a customer to go digital or to go online versus to get a professional mortgage broker face-to-face in front of them. And
that's a really important point,
Yeah.
and it's not really spoken about a lot.
Yeah.
The digitalisation of mortgages is mainly geared around lenders trying to get some sort of productivity or maybe some cost savings.
Spot on.
Rather than, like, there's no price, unless digital mortgages will be cheaper in the future. That would be the only reason why a consumer would choose it, potentially.
Spot on. I mean, Phil, you've just hit the nail on the head. What's the benefit to the consumer? Now, you know, I had a team of mortgage brokers of 1,000 mortgage brokers at the time when I left. It was 230 or whatever stores and blah, blah, blah. Mate, I could have put most of those guys in front of the customer and for 2 minutes developed trust and like straight away, and they would have taken the customer out of the game. Forget the customer going online and dealing with a computer and all the rest of it. Once I got one of my people straight face-to-face in front of a customer, that customer is in love, is gone.
And you could script it. Because Aussie was always well known as the best place to learn to be a mortgage broker.
We were probably the biggest trainer, and we were the biggest trainer and recruiter of professional mortgage lenders for 20 odd years.
I've heard that.
By none.
Seen that.
I mean, by far. Which we're very proud of. We're very excited of. I mean, you look around the industry and there are ex-Aussie people everywhere, and we are so proud of that. And we wish them well, whether they're with Aussie or a competitor. God bless them. Good luck to them. But we were very big into training. We bought across the world's best sales trainers, people like Todd Duncan.
Yeah, I know Todd.
In the States, that's right. So we were the first to bring Todd across. Literally, John and I met him 32 years ago in San Francisco at a mortgage conference.
Okay.
And we brought him across many, many, many times. And he led the way initially with us with quality sales training. Because don't forget, mortgage brokers, with respect, I mean, it was Cowboy City. And we had to take butchers and bakers and candlestick makers and turn them into professional mortgage brokers. No one left school or university going, yay, I want to be a mortgage broker. You know, most of these people came from being a police person, a butcher, a baker, candlestick maker, as I said, and we had to help turn them into a professional mortgage broker. And the industry stands as it is today, and it's a wonderful industry. It's an industry that still has a lot of legs on it. An industry in which is mortgages are mortgages. Everyone will need mortgages, there's not many industries that have had the growth of mortgage broking in the last 20 odd years, as we've seen.
I and we here at Momentum, we operate across pretty much every market segment in Australia, from like mortgages and real estate and all the way through to defence and space and all this sort of stuff.
You guys are running an empire. You're making more money than God.
Well, the idea is to deploy that into property, but I get to see a lot of industries, right? And really scratch the surface and dig down into these different industries. So we see a lot of industry, we know a lot of industries, and I often speak about mortgage broking? Because a lot of people look at mortgage broking and go, mortgage broking, yeah, there's 20-odd thousand mortgage brokers in Australia, right? But when you actually start, and a lot of people think it's not a very sexy, it's not a very dynamic, it's not a very, it's not an industry with a lot of tempo. It's sort of, people just sitting there writing home loans. But when you actually give people some context to the role of mortgage broking in Australia, and I always say 70% of all loans in Australia are written by a mortgage broker. The home loans for people are either an enabler for a happier, healthier family life or the driver of considerable wealth to shape a more favourable retirement. Those loans that mortgage brokers write power the biggest banks and lenders in Australia, which are well regarded globally. So these are the engine. Home loans are the engine for much of the Australian economy, housing and banking. Most Australians have a lot of money tied up in their superannuation in those banks, and the home loans that mortgage brokers write are the things that underpin them. I would say it's part of the absolutely the critical infrastructure of Australia is the home loan sector. And a lot of people, when you explain it to them that way, they go, "Oh, I didn't know, I didn't realise." Mm-hmm. And that's mortgage broking.
That's it. I mean, it's part of the fabric of the country. I mean, one of the key reasons that John used to drum into me, John was very much of the ilk of you put a roof over a family's home, it keeps the family together. John was very much of that ilk. He was not only driven commercially, but he was driven personally to try to do the right thing and try to get more people with roofs over their heads because it was very much a family thing for him. The home loans are part of a fabric of Australia. Home buying and home ownership is the fabric of Australia. So to me, it's a very sexy industry. I'd like to think we bring sexy back. And it's a very sexy industry. It's a very it's a real important industry for mums and dads. Mortgage broking is a real important industry for mums and dads because arguably it keeps competition out there between the banks because it's we keep the tension. We keep the tension so tight that it frankly cheeses off many of the banks that happens. But tough luck, the consumer benefits.
So we don't know where it's going to go, but I think it's the future is bright for mortgage broking, despite the fact that there's always tinkering around the edges of changing what they do and how they do it. You've been in mortgage broking for 30 years. Have brokers changed a lot? You said back in the early days and Aussie spent a lot of time training and upskilling brokers, turning them from other professions into the profession of mortgage broking. Is the broker of today substantially different of the broker 20 years ago?
So the broker of 20 years ago, and look, when I started in mortgages, it was a one-page application form and it was a front page. You signed a receipt for an application fee. That was it. You got yourself a couple of pay slips or you got yourself a bit of financials. That was sort of it. And, there was a lot of room to move. Today, the industry is so much more thorough, so much more regulated, so much more professional. There's so much more bloody paperwork too, by the way. Rather than a one-page application form, it's a 24-page application form. It has become, it's a lot more work. All right, frankly, it's a lot more work for the mortgage brokers. Now, look, it is what it is. Property prices have increased. The commissions they've received also has increased substantially over the last 20-odd years, 30 years as property prices have increased. But the workload has quadrupled for a mortgage broker. The risk for a mortgage broker, now they can go to jail if they do the wrong thing. Yeah. There is so much more responsibility and risk for a mortgage broker that, the cowboys of the industry from many, many years ago are pretty much gone, you'd like to think today, because they can't handle it. They can't handle the training, the updates in the training, the ongoing learning, the requirements by the government. It's just such a more professional industry today than yesterday.
And within the property investment space, I see it all the time, people start investing in property, they've got a job of some sort, they're either self-employed or a lot of them are PAYG, and they use property as a vehicle for bit of a side hustle, right? They're getting a pay slip, but they want to take control of themselves and their own destiny. So they start investing in property, and they go, I really like this property thing. And they start investing. And they go, I'd like to make it my profession. These days, most of them seem to become buyer's agents. But what would you say to all those people involved in property investing as mortgage broking as a career? Would you recommend it as somewhere to go and get involved in property, helping people with home loans?
Phil, to be a mortgage broker, there is not a specific recipe. And, what we've learnt over the last 30 years is you can come from any profession. You can be any age. You can be from any ilk. You've got to have, these are simple things, right? It sounds a bit, you've got to be a bloody hard worker. You've got to know that this is an annuity business. You're not going to go in there and make a buck within a year and just walk out a zillionaire. It takes you several years. It's an annuity business. It could take you 2 or 3 to start turning some decent cash flow and 6 or 7 to start really making some money that you want. You have to have a passion for the customer because you're with customers all the time. There is, I've always used the analogy. I never confused business and pleasure. What I did was a way of life. And that's the same with a mortgage broker. It's a way of life. 6 p.m. on a Saturday night, a customer could be upset or they could be calling you. You've got to take the call. You get paid well when you perform well. However, performing well means bloody hard work. So if you can keep your eye on the ball, if you do enjoy working with customers, you've got relationships are key. Relationships with lenders, relationships with customers. You've got to have a passion for that. If you don't go into the business. You've got to have a love. You've got to develop a love for the business. And that love's normally developed when you get good at it, to be perfectly honest. I'm not a big one on someone who says, I want to do what I love. I never wanted to be a mortgage broker when I was at school. What do I want to be? I wanted to be an astronaut or something. But because I got good at it, I learned to love it. And that's any profession. When you get good at something, you generally learn to love it.
Yeah,
and that's important.
I agree. And so the point I take from that is if you don't like people and you like being hidden in the shadows and locked up in a room with no connection with anyone else, mortgage broker is probably not the right career for you.
Yeah, go be a park ranger. Go be someone else. Mortgage broking and a face-to-face business is not for you. Don't forget you're sitting in customers' homes at 10 p.m. at night. You might be in the offices, you might be whatever, but you're with people all the time.
And that's good for a lot of people, and it's an attractive career choice. So if you're tuning into this and you want to get into mortgage broking, get in touch with the team here. We'll probably give you some info around it. Editor at smartpropertyinvestment.com.au. I don't know if you can still, is Aussie shut up shop these days? Are they still selling franchisees? I don't know. They're still growing.
I don't.
I'm not really that aligned with Aussie these days now that you're out of it.
Yeah. Yeah, look,
it's such a good it's such a good brand though.
Yeah,
like what you guys created is.
Yeah, thank you.
It's
yeah. Well, that brand was, look, there's no doubt that John was the absolute front of that brand, but it was created by the people. Yeah. And we had an amazing culture, Phil. We had extraordinary people. We had a love for the business, and we had a movement. We had a huge movement.
It was a movement.
Yeah, and I think that's that direction has probably changed today.
Yeah.
And I'm not as au fait with it as I was. I just wish the best for the people.
Well, and I'll testament to what you just said there around the people. My first mortgage broker, and we built a portfolio within Smart Property Investment to show people how to do it. We've been talking about it for years. Was an Aussie broker, Aussie Parramatta. Ross Lacane. He'll probably tune in this. This will come up in his feed and go, Phil's
doesn't he have a podcast too?
He's doing
a competing podcast.
Well, he does more in the broker space. He's now he's a coach to the brokers, the stars of brokers now.
God, good on.
Yeah, it was $1 billion broker, I think is what it's called. So Roscoe and he was good.
Ross was a very
he was the number one writer, wasn't he? I think
he was a very strong mortgage broker himself.
Yeah,
and he was always a big thinker.
Yeah, and he cared, right? He really cared about the customer, and
sure did.
He was a smart bloke, and he's good with people, but also good with strategy.
Yeah.
And look, there's questions around what is the expansiveness of the advice a mortgage broker can provide. Well, they're there to provide recommendations on really the right loans for your needs. So they need to understand you. And I always say to people, particularly property investors, if you want to get the best out of your mortgage broker, you got to bare yourself naked. Don't hide anything. Tell them exactly everything, and they'll be able to work out what best to do. They'll find out anyway.
They'll find out.
Yeah.
And Ross is a great example. And Ross ended up coming over to us when we acquired Wizard.
That's right.
Wizard Home Loans. And I remember at the time there's a couple of us leading that charge, and we did a last-minute Christmas Eve bid for Wizard.
Yeah, I remember.
And we undermined our friends at NAB at the time. Business is business, and NAB are still good friends, but it's the way it works. And we picked up Wizard, and we had 99 of their branches come across to be redeveloped as Aussie stores. I always called them stores because I thought the word branch meant bank, fat, lazy.
Yep.
Stores meant fresh, youthful Apple stores, for example, and added to our portfolio.
Yeah, he's a good guy, and he's still in broking. He still loves it. I think he's
good.
Enjoying himself. But mortgage brokers who are out there tuning into this, many of you, it's nice to keep connected and engaged with what's going on. I know a lot of mortgage brokers sometimes need to realign themselves with the value proposition of what they create. It can be a tough business. It can be all consuming at particular points and times. But I know the best brokers always come back to the point that you made, James, around putting roofs over people's heads is a real catalyst for a lot of the happiness of families and how people can grow and thrive and survive. And one of the biggest challenges you have now, particularly for mortgage, for property investors, is that you get into these sort of move into an election cycle, and everyone's talking about negative gearing at the moment. That's back on the radar. That's back on the radar. So it's hard. It's hard as a property investor because there are so many forces you can't control. Right? You can buy the right place, right time. And we'll talk about your property investing in a second, but while I got you in this negative gearing stuff, like how do you sort of give counsel to people about don't get too caught up in all of this? Like, the stuff that you just can't do anything about.
Look, you've got to swim in your own lane. You've got to run your own race. I was an early property investor. I was 19 when I bought my first property in Great Western Highway in Parramatta.
Oh, yeah?
A little 2-bedroom apartment. I think, and it was, I think I paid $76,000 for it. And Dad came in with me, and we repainted it, recarpeted it, rented it out, kept it for 3 years, and sold it for I think 112. I thought I was a legend, and just went from there. I loved property investing. It's something that I've always had a soft spot for. Mums and dads, it's one of the best investments you can make because you can drive past it, you can touch it, you can feel it, you can improve it personally, like I did with my first apartment, painted it, carpeted it, that sort of stuff. But it's really making sure that financially you don't get over your head. Now, we've had a tough time the last 3 years, where interest rates have tripled. Payments have tripled unless you're locked in, and they're coming off anyway. And that's been the hardest thing. I mean, rates have tripled. Extraordinary stuff. When the RBA was only saying 5 months before rates started going up, it'll be years before rates go up. So, I'm very disappointed in some of their announcements at that time because it put mum and dads in a precarious position. And so mortgage brokers have had to go in there and give the right advice to mum and dads, whether to lock in as quickly as they could, whether it's to refinance to something that's potentially better, or inevitably whether to drop one or two properties in their portfolio or drop the only property or reduce their exposure. So having a close alignment with mortgage brokers and getting them to help you through the financial situation is really important. As a general rule, investors across the country haven't had much of a problem renting their property out. In fact, arguably they've rented it out for far more today than they would have rented yesterday. But it's still, getting 20%, 30%, 40% more in rental income doesn't match having a mortgage that's tripled. And renters don't care that your mortgage have tripled. You're the landlord. You're the baddie, so to speak. So you really need to understand how you can get through that the best you can. And I get a lot of people still ringing me up and even friends of families and their kids or themselves. And first thing I say to them is that let's just have a look and stop spending on stupid things. Amazon's not your best friend. Stop getting your parcel deliveries every single day. It's extraordinary. the stuff that I see when people say, look, I'm doing it tough, well, what's this expense for? What's that expense for? Oh, no, they're for the new this, that's for the new that, that's for the new. But we've become, there's just so much consumerism today, and people lose sight of, no, I've got these 2 or 3 particular commitments that are hardcore, whether it's food on the table, whether it's the mortgage payment, whether it's the car payment, they're a must do. Not, oh, look, we've got to go to Disneyland. I promised the kid. No, just get rid of those superfluous expenses. You've got to be a lot harder on yourself. But to be perfectly honest, I'm surprised how resilient people have been. Tripling of mortgage payments for those mortgage holders, even the massive increases in rent for those that don't have a mortgage. I'm surprised how resilient they've been.
Yeah, and a lot of it's just media hype and back to this negative gearing thing, like, again, tinkering with that, maybe having a go at that. You're going to hear a lot of this coming up to the election. Just don't absorb yourself too much with it. But, this whole idea, everyone's going to have to come off this mortgage cliff and everyone was going to have to put their properties up for sale. Everyone's really doing it tough, savings and stuff. There is, from what I understand from some of the message I'm getting from some banks, there is still more savings in the system and money in offsets than what there were pre-COVID. Like, there is still a lot of dough. People are still quite far ahead on their mortgages through additional repayments and or with offsets. So there's still fat in the system.
Phil, it's generally it's a multi-speed economy. It's like it's a multi-speed property market too. I get people saying, "What's the property market like?" And I go, "Which one?"
Yeah.
There's 1,000 property markets in Australia. Which property market are you talking about? The eastern suburbs of Sydney, or you're talking about down in Hobart? I mean, which property market? And the same with savings and people that are coasting along still okay. There are a lot of people who have savings and who are coasting along okay and who are still seeing the property market through well. Mate, there is still a lot of hurt out there though.
Yeah.
There's a lot more hurt out there than that gets discussed.
Yeah.
A lot more hurt out there, the mums and dads that are struggling, that are juggling like you wouldn't believe and literally living week to week, doing their very best.
Yeah. Which is tough and challenging, and a lot of that goes unseen. But there are people out there doing it. And, I would say the government has an obligation to make sure that Australians aren't struggling in that capacity. Now, if someone comes back down to your own decision-making, you need to run a good personal family budget to make sure that you're best geared to weather these storms and when the unseen sort of eventuates. But for property investors, these basics of good budgeting and diligence and spending and owning your family balance sheet, owning your own personal balance sheet so you can invest correctly. That's what the best investors do. And you've mentioned you've done a lot of investing. I want to sort of speak a little bit more about that other than just a place in Para. Welcome back, Phil Tarrant, having a chat with James Symond. Now, James, property investor, your first property, a 2-bedroom apartment in Parramatta on the Great Western Highway. I could probably visualise that. It'd be one of those blonde brick ones there on the right-hand side, not far from the intersection of Church Street. I know them well. I grew up around that way and that.
Mate, I still remember the address, Phil. I think it was 10/29B Great Western Highway, and it was a red brick block.
It was a red brick. There you go. And I imagine that was a smart investment. You own that today, it'd probably be worth about
I don't know.
800 grand or something.
I don't know. It was pretty small.
But so, what's your philosophy to investing? Are you a buy and hold guy? Are you a develop guy? Are you a tick and flick type guy? Give us a sense for how you frame it.
Phil, I surround myself with a lot of professional business people, and everyone has their different attitude. I've got friends who buy and never, ever sell. I've got friends who turn over very quickly and just buy, sell, do up or whatever. I'd say I'm in between. I've got properties I've had for 20 plus years, and I've got properties that I'll go and buy an 8-pack of apartments like I recently did at Coogee a couple of times. And I'll buy the 8-pack of apartments and spend some money, do them up and strata them and sell them individually. If you've got a couple of dollars behind you, you can do that. But, it takes a couple of bucks to do that. For the average mum and dad, it's probably just buy a quality property, and it's probably just to hold it. It's not a turn it over. It's probably just to hold it. Yeah. If you've got a stable job, if you've got a mortgage on your home and you're looking at just furthering your future interests and investments, just go and buy a quality property, even one that you can drive past every week, every day if you wanted to, so you can see your asset and you know it's real, rather than going and buying on the other end of the earth. It's not that hard stuff. I wouldn't particularly get involved in many of these investment property schemes or anything like that. Doing your own homework is half the fun. Australia has buyer's agents, and buyer's agents for certain people are great. If you're very time poor, if you want to buy something interstate and not sure of the area, buyer's agents certainly can help a lot. But I know that, we did our time and we looked into buyer's agents, and buyer's agents were very good for a certain part of the marketplace.
Yeah.
And for the broader Australian marketplace, the average Aussie looked upon property as a sport, and they were very comfortable searching through realestate.com, very comfortable going to house openings and doing homework themselves for what could be one of their biggest investments of their lifetime. So it's property investment. I mean, as long as you can work with your mortgage broker and financially it is appropriate for you, you just jump in. And you know what? If you jumped in today, arguably over the next year, 2 and 5, interest rates will only go one way, arguably, and that's down. So if you can afford the investment property today, you can afford the investment property tomorrow. Unlike 3 years ago when you're climbing the mountains and rates tripled, over the next 3 years, arguably, rates will come down strongly. So it's one in which your first port of call is working with a lender or a mortgage broker and understand your capabilities, all right, if you've got any firepower in your armoury. And if you do have firepower and your mortgage broker or your bank says, listen, you can borrow 400 grand, 800 grand or whatever, well, that sets you up to then understand going, okay, well, this is what I'd like to do. And you can seek financial advisor, you can seek financial advice or professional advice. But to be perfectly honest, it's innate in many of us, this thing called property. We grew up in it, we live in it, we understand what the prices of it is around our area. And I think you can take more on yourself to be more responsible for your investment than just basically letting others direct to your needs.
Yeah, and I think that's pretty well considered, James. What I would add to it is if you want to make the time, you're going to commit the time, energy and effort to your education and put the hard graft in and burn the shoe leather, you can do it all yourself. You don't need to use a buyer's agent. I completely agree with that. But there's a lot of Aussies out there who are in PAYG jobs. They're in the 9 to 5 slog. And probably enjoying it or maybe less so. But what property does, it provides an enabler to take control of things. You can be in business for yourself if you're a property investor. It means you use the money that you make in your job and deploy it in smart ways. And guess what? You're in control of the decision making. A lot of people get great satisfaction out of it. And that in many ways is the sport, right? It's an enabler. It lets people actually have a crack in a reasonably forgiving environment as long as you do all the right things. And that comes to the top end of what I said around this. You've got to use the right people. You've got to use the right advisors. You've got to be using mortgage brokers. They're going to help you make sure that you are less likely to make the mistakes, which means that you're not going to be able to hold a property. And the secret of property investing for most Australians, again, to your point, you buy a good asset and you let time do the heavy lifting.
Spot on, Phil. I mean, there aren't many properties in Australia over a length of time that have gone backwards. They've only actually arguably gone forwards hugely. So it's, in the last 7 or 8 years, if you haven't received a 50% increase on your property, there's something wrong in the last 7 or 8 years. In fact, arguably, there are many properties that have doubled in value in the last 7 or 8 years. And that's the general rule. I mean, the last 40 years, the general rule has been between 7 to 8 years, property prices double. Now, that's a little rubbery, but if you look at the last 40 years, property prices have doubled every 7 to 8 years. That's not a bad investment, safe, secure, property, bricks and mortar. I can touch it. I can feel it. It's not like a share portfolio where the shares could just go away. It's an exciting, safe investment for most Australians.
Yeah. And it is largely forgivable if you get the basics right. And by that I say, if you're investing in property, you're not investing in isolation by yourself. You're investing with three very strong partners. That first partner is what you just spoke to, and that's the long-term historical performance of property. The second important partner is a lender who's happy to give you 80% of the value of the property. So they're not going to be putting their dough in areas which are going to go backwards in value, or they're not going to be hopefully making wrong decisions on backing the wrong investor. And the third very important partner, and often it sort of gets a bit clouded when you hear what's going on right now, is the Australian government. The way they've got it structured is that Aussie mum and dads and Aussie investors provide the housing for a third of all Australians. It's not the government that provides the housing, it's the Aussie investor. So they have three very, very strong partners which can give you sense to the significance of it as an investment class. That said, people still get it wrong. That said, people still make the wrong decisions. So chats like this, James, hopefully can help frame people's sentiments towards property investment.
That's it. And Phil, negative gearing is a very important aspect of that for the mums and dads. They rely upon the negative gearing. And look, to be perfectly honest, I truly hope the government don't touch it. I don't believe they will. I believe that the public will, crucify them if they really go down that path too hard. But negative gearing has been a very important part of the investor's portfolio in which to build upon.
Yeah, well, it's been going for nearly 100 years from what I understand, negative gearing, and you see all the information coming out right now, which pretty much saying it may be a very, very small drop in property prices if you remove the tax concessions around negative gearing. The other side of it is that you're going to have a lot less properties available.
Rents will go up. For
rents, and rents will go up. And now we need to remember also, I know it is the great Aussie dream for everyone to own their own home. A lot of people are never going to be able to buy their own home. That's the reality of the world. If a lender, to the point around having a strong partner, a lender will lend to you if they have confidence in your ability to repay a mortgage. I hear today that, it's a huge percentage of Australians that have non-traditional employment, as in they might have three seasonal jobs or gig economy jobs. Lenders probably don't like that too much, which means that you're going to have to make some choices around whether or not you want a job that lenders like and are comfortable with, or you want a more lifestyle job and therefore maybe rent all your life.
And that's where, once again, Phil, mortgage brokers come in, because people out there today, especially people under the age of 30, have got more multitask jobs, have got more not non-traditional job, and a mortgage broker needs to work with them to make sure that the lender's presented the consumer in the right way, rather than just typing into an application online and doing their best.
Yeah, and good luck trying to get a digital home loan to do that. You need a mortgage broker. But anyway, it sounds like it's a loving with mortgage brokers. We're both passionate about mortgage broking, which is good. And I think we like the outcome of what it is. And I personally like seeing people get ahead.
Yeah.
And I particularly like seeing people get ahead because of property. And that's very much about what this podcast is. It's been very much your journey professionally with Aussie for many years. And you'll have to come back and tell us what you're going to do when you do it.
Sure will. I most definitely will.
He's not giving anything away, and it's probably one of the best kept secrets around. Yeah. But James Symond, thanks for coming in, mate. Appreciate it.
Thank you, Phil. Thanks very much.
Thanks for tuning in, everyone. Remember to check out smartpropertyinvestment.com.au. Social media, you can track us down. If you like what we're doing, please keep those reviews coming on the podcast. We get a real kick out of what we do here, and the team, big team here that do all the heavy lifting and make me sound good. So hats off to them. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.